Hello viewers, so welcome to my channel. I'm Hasham Ali Khan. In this video, I'm continuing the problems on accounting standard. So far, 11 problems I have completed. In those 11 problems, last three, 9, 10, 11, these three problems I have done on AS3, accounting standard 3, that is cash flow statement. And before that, I have completed the problem on AS2, valuation of inventories. Now in this video, I am going to explain the problems on AS4, contingencies and events occurring after the balance sheet date. So totally from 12 to 18 problems. These are the problems I am going to explain you in detail. So remember, in examination, in the subject accounting standard, they will ask the problems also. A specific case study will be given and you are required to explain the provisions of particular accounting standard. So watch the video with full concentration, then only you can understand. So before starting the problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Take the screenshot of the solutions of these few problems on AS4. Then I'll explain all the problems in detail. Now, 12th problem. I'm beginning with problem number 12. Now, see carefully. If in X Limited, theft of cash of rupees 5 lakh by the cashier in January 2007 was detected only in May 2007. So actually, the cashier has made the fraud, stolen the cash in January 2007. But this event was detected in the month of May 2007. The accounts of the company were not yet approved by the board of directors of the company. Whether the theft of cash to be adjusted in the accounts of the company for the year ended 31st March 2007, decide. Accounts are closed on 31st March 2007. The cashier stolen the cash in January, but this fact was detected in May 2007. The financial statements are not yet approved by the board of directors. The question is whether this loss of rupees 5 lakh should be adjusted in the accounts or not. So specifically, accounting standard 4 has given the provisions regarding the events occurring after the balance sheet date, contingencies and events occurring balance sheet date. So the accounting standard has specified which are the events which require adjustment and which are the events that do not require adjustment. Simply a disclosure should be given in the director's report. So simply we can say two items are there, adjusting items and non-adjusting items. So we have to decide by applying the provisions of AS4. Now in our problem, see here, problems on AS4. In this video, only problems on AS4 I am going to explain. So AS4, what is the title of this AS4? Contingencies and events occurring after the balance sheet date. What it provides? It provides that an event occurring after the balance sheet date may require adjustment to the reported values of assets, liabilities, expense or incomes. So this accounting standard provide that there are some events which are occurring after the balance sheet date, but those events should be adjusted in the financial statements which are prepared on 31st March before the approval of the financial statement by board of directors. If a fraud of the accounting period is detected after the balance sheet date but before approval of the financial statements, it is necessary to recognize the loss amounting to rupees 5 lakh and adjust the accounts of the company for the year ended 31st March. This is the provision given by AS4. It says if an event occurred after the balance sheet date but before the approval of the board of directors, then that event should be recognized as an adjusting item, and that event should be taken into account while preparing the financial statements. So in our problem, theft occurred in January, but it was detected in May. That means after 31st March. The directors have not yet approved. So in this situation, that 5 lakh rupees should be taken into account in preparing the financial statements, since it is an event occurred after the balance sheet date but before the approval of financial statement by board of directors. That's it. Now, second one, 13th. MEC Limited could not recover an amount of rupees 8 lakh from a debtor customer. The company has to receive 8 lakh rupees due from customer. The company is aware that the debtor is in great financial difficulty. The company recognized that it will be difficult for the company to get back the money from the debtor because the debtor is in financial difficulty. The accounts of the company for the year ended 31st March 2011 were finalized by making a provision of 25% of the amount due from that debtor. So at the time of closing the accounts, the management has decided that we have to make 25% as provision for doubtful debts. We may get or we may not get 25% of 8 lakh. So in May 2011, that means after the balance sheet date, the debtor became bankrupt and nothing is recoverable from him. Accounts are closed on 31st March. In the month of May, that debtor has become bankrupt. That means insolvent, and nothing can be recovered from that customer. Nothing can be recovered. And this fact come to know on May. In May 2011, the accounts are closed on 31st March 2011. Now, do you advise the company to provide the entire loss of 8 lakh rupees in the books of account for the year ended 31st March 2011? Ultimately, it is asking you whether 8 lakh rupees should be adjusted in the financial statement on 31st March or not. The event occurred after the balance sheet date in May 2011. So what AS4 says, if an event occurred after the balance sheet date and before the approval of financial statement by the board of directors, and it's a substantial item, then it should be adjusted. It should be adjusted. Now what the provision says, according to AS4 on contingencies and events occurring after the balance sheet date, in case additional information is available in respect of conditions existing on the balance sheet date, adjustment is required to assets or liabilities if any. Now remember, if any significant event occurs after the balance sheet date but before the approval of the financial statement by board of directors. So simply it says, AS4 says, if an event occurred which give additional information, if an event occurred after the balance sheet date which gives additional information of the conditions existing on the balance sheet date. In our problem, at the balance sheet date, the management already know that the debtor's financial position is not good. We may not be able to recover the amount. So this is the condition on 31st March. Later on, the debtor became insolvent. So we got additional information for the conditions existing on the balance sheet date. So AS4 says it should be recognized. It is an adjusting item. So complete 8 lakh rupees should be adjusted in the financial statements. Because this is the event occurring after the balance sheet date. It's a case where additional information is provided on the conditions existing on the balance sheet date. And the event occurred before the approval of the financial statements by the board of directors. So it is an adjusting item. It should be considered while preparing the profit and loss account and also for balance sheet. It should be adjusted. Now, in the present case, Sundry debtors as on 31st March 2011 should be suitably adjusted by providing for the entire amount due from the debtor who has become bankrupt as nothing is recoverable from him. So while preparing the financial statements as on 31st March 2011, this 8 lakh rupees should be deducted from the receivables, from the debtors, because nothing is recoverable, right? So it should be adjusted. Nothing is recoverable, it should be deducted from debtors. And that loss of 8 lakh rupees should be charged to revenue account. The amount is required to be adjusted, as in this case the conditions existing on the balance sheet date in respect of which additional evidence has been provided by the bankruptcy of the debtors. The conditions were already existing on the balance sheet date and the event occurred after the balance sheet date which provide additional evidence. So it should be recognized, it should be adjusted. That is the provision regarding AS4. Now, 14th problem. A major fire has damaged the assets in a factory of a limited company on 2nd April, 2 days after the year-end closure of account. 31st March, the company has closed the accounts. So 2 days after closing the accounts on 2nd April, there was a major fire occurred in the factory. The loss is estimated to be rupees 20 crore, out of which rupees 12 crore will be recoverable from the insurers. The stock was insured, the assets were insured. So insurance company agreed to pay 12 crore. So actually total loss was 20 crore. Explain briefly how the loss should be treated in the final accounts for the previous year. Ultimate question, 8 crore rupees is the loss. How to treat this 8 crore rupees? Should it be adjusted in the financial statements or it should not be adjusted in the financial statements? Simply a disclosure should be given in the director's report. So decision has to be taken whether it can be adjusted or not to be adjusted. Now we apply the provisions of AS4. AS4 says the item will be adjustable only if it provides additional evidence of the conditions existing on the balance sheet date. Here, when balance sheet date 31st March, there was no condition that fire will occur. There was no expectation, no opinion. That means this fire occurred in unexpected. So this event is an unadjusting event. That means this 8 crore rupees loss, 20 crore rupees gross loss, out of which 12 crore is receivable from the insurance company. So net loss will be 8 crore. It is not an adjusting item because it does not provide additional information of the conditions prevailing on the balance sheet date. On the balance sheet date, there is no expectation that fire will occur. It is completely unexpected. So, it does not require adjustment, only disclosure in the director's report is required. Now see here, the situation is based on AS4 contingencies and events occurring after the balance sheet date. The standard requires adjustment to assets and liabilities for the following 3 types of events. Specifically, the AS4 has given 3 events. If any one of the 3 events happens, then only adjustment is required, otherwise not. What are the 3 events? First, those which provide further evidence of the conditions that existed at the balance sheet date. So those events which provide additional evidence of those conditions which are existing on the balance sheet date. Conditions were existing, but additional information we got after the balance sheet date, that requires adjustment. Second, those which indicate that the fundamental accounting assumption of going concern is not followed. That is, continuance of existence or substratum of the enterprise is at stake. One of the fundamental accounting assumption is accounting is expected to continue for a long period of time. Going concern concept. There is neither the intention nor the necessity to wind up the business is going to continue for a long period of time. That is a fundamental accounting assumption. But sometimes the fundamental accounting assumption is doubtful. The company is not expected to go for long. The substratum of the enterprise is at stake. In that case also the event should be adjusted. Third one, those which are required to be reflected in the financial statement due to statutory requirement or due to the special nature. If the law change, if there are changes in the statutory requirement or special nature of event, in that case also the event should be adjusted. So when the event should be adjusted, three conditions are given. First condition, if the event provides further evidence of the conditions existing on the balance sheet date. Secondly, those events which prevents the following of fundamental accounting assumption, that is going concern concept. Last one, those which are reflected due to changes in the statutory requirement or special nature. So in these three conditions, it requires, AS4 requires that adjustment in the financial statement should be made. The present events do not relate to conditions existing at the balance sheet date. Present condition is what? Fire occurred on 2nd April and the loss is 20 crore. Insurance company agreed to give 12 crore. Net loss 8 crore. Now 8 crore should be considered or not in preparing financial statement. No, none of these three conditions are satisfied. So we can say 8 crore should not be adjusted. Should not be adjusted in the financial statements. However, the amount is huge. The substratum of the enterprise is at stake. So in that case, it should be disclosed in the report of the board of directors. Hence, no specific adjustment is required in the financial statements. However, AS4 requires disclosure in respect of post-balance sheet items representing unusual changes. This is unusual change. All of a sudden there was a loss by fire and 8 crore rupees is the loss incurred on fire. So affecting the business or substratum of the enterprise at the balance sheet date. Because the amount is huge, it affects the substratum of the enterprise. So AS4 requires that proper disclosure should be given in the director's report. In the present events, the loss of assets in the factory can be considered to be an event affecting the substratum of the enterprise. The present situation, it is clear that the substratum of the enterprise will be affected due to this fire. So it requires disclosure. Hence, an appropriate disclosure should be made in the director's report finally. One note you have to remember, if the fire had occurred on or before 31st March, then the loss should be taken into account in the financial statements. Had the loss been occurred before 31st March, then whatever loss was there, that would have been affected the financial statements. That will be taken into account in financial statement. But here, it will not, because the fire occurred after the balance sheet date. That's it. Now, 15th problem. Mamta Limited investing rupees 25 crore in April 2018 to acquire Bhavana Limited. After 2 months of negotiations starting in February 2018. How should this be reflected in the financial statement for the year ended 31st March? Accounts are closed on 31st March 2018. So Mamta Limited invested 25 crore in April. That means after the balance sheet date, to acquire Bhavana Limited. After 2 months of negotiations started in February 2018. So already it was started in February 2018. Negotiation were started in February 2018. But the investment was made in April. Now, simply making the negotiation does not mean that there is some event occurred. Only negotiation is going on. So it does not require any adjustment in financial statement on 31st March. Negotiation may or may not result in a deal. It is not compulsory that a negotiation is started, so deal will be completed. The deal may or may not be completed. So negotiation is not an evidence, not a condition. So the acquisition happened after the balance sheet date, hence this is a non-adjusting event. The event occurred after the balance sheet date, it is non-adjusting event because the condition does not prevailing on the balance sheet date. Next, 16th one. Manank Limited entered into an agreement with Anish Limited to sell its immovable property included in the balance sheet at rupees 5 lakh for a consideration of 20 lakh on 15th February 2018. The sale deed was registered on 18th April 2018. How should this be treated in the balance sheet as on 31st March? See here, our company is Manank Limited and Manank Limited is entering into an agreement with the seller Anish Limited to sell its immovable property included in balance sheet. So Manank Limited is having a property, immovable property, and the balance sheet value of the property is 5 lakh rupees. And they are in an agreement to sell the property for 20 lakh. 5 lakh rupees is the book value, but the selling price is 20 lakh. On February 2018, that means the agreement was over. Manank Limited will sell the property for 20 lakh rupees to Anish Limited and the agreement was completed on 15th Feb. But the sale deed registration was completed on 18th April. That means after 31st March. The sale was completed, agreement was over before 31st March. But the registration was completed after 31st March. How should this be treated in the balance sheet date? Now remember one point. The date of agreement is very important. Registration is only the completion of the formality. Registration only is the completion of the formality. But when the agreement was completed in the month of February, before 31st March, that means this event occurred before 31st March only. It should be completely recognized. The item should be adjusted. That means in the books of Manank Limited, in the balance sheet, that immovable property should be de-recognized. That should not be considered as an immovable property in the books of Manank, already sold out in the month of Feb. So the sale of immovable property was concluded before the date of approval by the board of directors. Registration merely confirms the sale. Hence, this should be considered as an adjusting item. The property should be de-recognized in the balance sheet as on 31st March 2018. That's it. Next, 17th problem. Ram Limited signed an agreement with the employees union on 1st September 2018 for revision of wages with retrospective effect from 1st April 2017. That means the agreement, Ram Limited company has made an agreement with the employees union. The agreement was conducted on 1st September 2018 for revision of wages with retrospective effect from 1st April 2017, resulting in an additional liability of 9 lakh rupees. Advise the appropriate accounting treatment as per AS4. Actually, AS4 applies to those events which are occurring after the balance sheet date. But this revision of wages or revision of prices is not treated as an adjustable item. It should already be taken into account. So anything which gives effect to retrospective effect should not be considered under AS4. So any retrospective change in price or wages should not be considered as an adjusting item. It should not be considered. Then, as they do not represent the condition as the balance sheet date, because these events are not taken as those items which are existing on the balance sheet date. Now, last and final problem, 18th one. Akhil Limited closed its accounting year on 30th June 2010 and the accounts were approved by the board of directors on 20th August 2010. So accounting year end on 30th June and the accounts were approved by the board of directors on 20th August 2010. The company is engaged in the business of laying pipelines. While doing the burring work on 1st September 2010, it met with a rocky surface, for which it was estimated that there would be an extra cost to the tune of rupees 80 lakhs. State with reasons how would you deal with the issue in the financial statement for the year ended 30th June 2010. Accounts are closed on 30th June. Board of Directors have already approved the financial statements on 20th August. But there was an event occurring on 1st September. An unusual event occurred. That means burring work, they met with a rocky surface, due to which an additional expenditure of 80 lakh rupees has to be incurred. So the event occurred after the approval of the board of directors. So it does not require any adjustment. Only a disclosure in the report of board of directors is required. No adjustment in the financial statement is required. The event occurred after the balance sheet date and after the approval of board of directors. So in this case, the incidence which is expected to increase the cost becomes evident after the date of approval of accounts. Hence, it is not an event occurring after the balance sheet date. However, this should be mentioned in the director's report that just now I told. That's all. So 12th to 18th problem I have completed in this video, explaining the provisions of AS4, contingencies and events occurring after the balance sheet date. In the next video, I'll start the next accounting standard, that is AS5. So keep watching, enhance your knowledge, get a good command on this subject of accounting standard. So share my channel among your group, among your friend circles, so that more students can watch the video and enhance the knowledge. Subscribe my channel if you have not yet subscribed. And I have uploaded so many videos on different subjects. So visit the playlist, find out the very number of subjects videos I have uploaded. Select the subject, select the video, and increase your knowledge. Be confident on the subjects. So inshallah, we'll continue the next problem in the next video.